I keep forgetting teaching you guys right here. Okay, so all I've done is calculate my right to use asset and lease liability. So that's going to be our asset and our liability. So now let's go to page 7 and continue with the question. So you've got a liability and you're going to be making payments. So we have to set up a lease amortization schedule, and we're going to use the effective interest method. Okay. So we're going to do a lease amortization schedule for the lease obligation for Russell for the 5-year lease term, and we're going to round to 2 decimal places. When you're doing Wally Plus, be careful. They'll either say 0 decimal places or 2. So just pick which one. Now, July 1st, 2020 was the first day of the lease. So what happens on the first day of the lease? You make a payment. So, sometimes this is split into 2 rows, and sometimes it's not. Splitting it into 2 rows is actually easier, which is why I did it, so you could see what it looked like. I will show you an example on when we get to page 9 with the 2 rows. Okay, so page 9 has 2 rows. Just so you can see how they both work. It's not a big deal. Okay, so our lease payment from the page previous is $20,066.26. Now, since we're paying up front, is there any interest accrued? It's the first day. No. So that means all of it will go to the principal. So 20,066.26. So our balance of the obligation, it'll start at 88,000 minus 20,066.26. So that equals 67933.74. Now, July 1st, 2021, our next payment. So notice the payments are the same every year, except for this little $4,500, because that's going to be our bargain purchase. So 20,066.26. Now, we're going to be using the 9% because there was only one interest rate given, or they're both equal. So always use, in case there are 2, the interest rate you used on your present value calculation. So this is going to be 9% times the balance. Notice this is just like bonds. 67933.74, and that equals 6114.04. So this payment, this much went to interest. How much goes to principal? Well, the difference between them. So 20,066.26 minus 6114.04 equals 13,952.22. And that means the remaining balance is this minus the lease obligation that was reduced. So that equals 67933.74 minus 13,952.22, which leaves us with 53,981.52. And then the calculations go the same way. Notice here, however, the very last step is them paying the or us paying the BPO rather, because we assume it will be exercised. Okay, so let's just recap. We're doing the accounting for a lessee. Here's the formula that we're going to put with our view of the asset and the liability. But before we can do the entries, just like with a bond, we set up an effective interest amortization table. Here's the bond, the loan or obligation, because it's not really a loan, just a liability. 88,000 we paid right up front, so we take that balance off right away to give us this. The lease payment right up front doesn't have any interest because it's day one of the lease, so it all goes to the principal. That's why we took off the whole thing. But from there, everything else follows just like a bond. Same payment all the way down. You use the rate that you used on the present value calculation. You subtract these two, that's going to be your principal, and you take the principal amount off the principal balance from last year. And work your way down, and you should get to zero at the end. Questions? Okay, let's go through and do some entries. I can tell you're excited about this, you guys. I know you're not here right now, but I'm just imagining it. Okay, let's do the entries on the lessee's books to reflect the signing of the lease and the payments and expenses related to these lease for the years just 2020 and 2021. The annual accounting period ends December 31st, and they do not use reversing entries. We're pretty much never going to use reversing entries in this course. You learned what they were, and you'll need them for the CPA one day, but right now you don't need them. Okay, so let's start with July 2020, and that's called the inception, which just means start of lease. So, besides setting up the lease, we're also making the payment today. So I'm going to I'm going to show you them separately, then I'll combine them, okay? So I'm going to do inception of the lease 1. So we're going to debit right of use asset for 88,000 and credit lease liability for 88,000. Just so you know, you've got some room on page 8 too, so don't feel that you have to squish them down. Then we've got the first payment. Debit lease liability for 20,000, 066.26, and credit cash for the same. So this came from the calculation on page 6, and we can combine. So if the question says, do the entry at the start of the lease and first payment, you know you've got to combine them. So we would debit right of use asset for 88,000. We'd credit cash for 20,000, 66.26. I don't know why they do it in cents. And we credit the lease liability for the difference. So 88,000 minus 20,000, 066.26, which we already know up there is 67933.74. Okay. So that's the very first day. You sign the make your payment, here's the entry. So now, what, just go right to July 1st, 2021, or does something happen in between? Well, that's right, you guys, something happens in between. We have year end. So we have December 31st, 2020 year end entries. If our year end was July 1st, we'd be fine. We wouldn't have an entry in here, but usually you're going to have a year end smack in the middle. So we've got two pieces. We have to record interest and we have to record depreciation. So I'm just moving this up as much as I can. So first we're going to record interest and then we're going to record depreciation. So we're going to debit interest expense. And what do we do with the lease liability? We're going to credit it. So we're going to credit lease liability for, are we going to use the full 6114.04? Nope, we've got to prorate it by 6/12 for July to December. So that works out to 3057.02. And same thing here. Now, notice with IFRS, sorry guys, trying to keep this here. Notice with IFRS, uses lease liability as the holding account rather than a payable line. So they're not really increasing the lease liability, it's just like a holding account. So think of it as a holding account there. Okay, so that's okay, we're used to doing that kind of entry, but now we have to do the depreciation. So you know the depreciation entry there, it's easy. Depreciation expense, credit accumulated depreciation. And technically it's right of use asset. Okay, so we know the cost of the asset. Our right to use asset was $88,000. So we're going to put $88,000. But now we go back and we have to figure out, should we take it over the lease term or should we use the life of the equipment? And what we said earlier, you probably don't remember, but somewhere in those notes, if there's a BPO, are we going to keep it? Yes, reasonably exercised. So are we going to give it back after 5 years? No, we're going to keep it and just assume we're going to keep it. So we're going to do it over the whole life. So because there's a BPO, we, the lessee, are going to keep it. So we use that for depreciation. We use the 10 years because we're going to keep it. So it's going to be 88,000 divided by 10. And it's only been 6 months. So that works out to 4,400. And we'll make a little note here. Because of BPO being exercised, we will keep the asset So use the economic life, not the lease term. Okay? So 10 years, not 5. Okay. So that was the year-end entry at December 31st. So now we want to do the July 1st, 2021 entry to see how it all rounds itself out. What pen color? Such a decision. Okay. So July 1st, 2021, second payment. Okay. So this one you got to think about. So what's physically happening? We're making a payment. So we're going to credit cash for $20,066.26. So that one's easy. But we've only recorded 6 months of interest expense. So we have to do the rest of it. So we're going to debit interest expense. And since we divided it in half, 6/12 last time, that's the same amount. So we're going to take the 611404 times 6/12, which is 05702. Just make a little note for yourself though, that this is January 1st to July 1st, 2021. Okay. So we've got the interest expense. What did we do at December 31st with the interest expense that we never paid out? And I'm even paid out with little quotes. Did we put it into a payable account? No, our holding account was lease liability. So back on page 7, we had lease liability. So that's just a holding account. We better close that off. So we're going to debit, oh my goodness, debit lease liability for 305,702. They're not always going to match. If it was prorated a different way, it would be different. So that's to close off holding account for interest payable. Okay, it still doesn't balance. So what do I have to do with the rest of that? Well, if we look back at our little chart, we've taken care of the interest. It was in 2 pieces, but we took care of it. What have we taken care of? The reduction of the lease obligation. So if we're going to reduce a liability, are we going to debit or credit it? This is all going to be debited. So we're going to debit lease liability for 139